Hi, this is Zach from Zach's Traders Cafe with a look at the major markets on Thursday the 5th of May. Starting off with the FTSE 100, and we've had this wedge breakdown below the 50 and 200-day moving averages and below the floor of this rising formation from January. That's had its floor around the 6200 level, but the message at the moment is that while we're below the 50-day moving average at 6187, there's the risk of a test of support back towards the March low at 60.36. Anything below that would then be rather serious as far as the post-February recovery, especially since we've had this clear RSI breakdown below this February support neckline support around the 50 level. On to the DAX, and here we're on the edge of our seats to see whether this market will fill the gap down to 97.70 that was made in April to the upside after an island reversal. Looks as though we probably will do that, especially while we remain below the 50-day moving average at 98.86. End of day close above that is the earliest buy signal at the moment. RSI at 42 also favors a test of that gap at least at 97.70. Anything below that gap at 97.70 targets 9500. And then a probable swift acceleration to the downside, given the way that we've had this narrow extended bull trap through the 200-day moving average for April. On to the Dow, and even here this outperforming market seems to be topping out to some extent. We've got the support line here from January, which just been broken there around the 17,680 level. Well, obviously the RSI below 50 as well, down to 45, so that's also a leading indicator on downside. Initial target here, the 50-day moving average at 17,500, and maybe at that point we can then reassess whether this market's really topping out or not. But it would be surprising, even if we head higher subsequently, if 17,500 was not tested first. Onto the S&P, and here we've got situation where there's also a break of this near-term support line, 2040, the 50-day moving average, and the initial support below that, up down to 2013, the 200-day moving average. But a break of the 50-day average would be a definite negative for this market, and if not a sell signal, at least an intermediate sign of weakness when combined with the RSI failure as well. Nasdaq was the market which sort of started the hint of bearishness for these for US equities. We broke this rising wedge at the middle of the last month with a gap to the downside. There were more gaps as well, and then the loss of the 50 and 200-day moving averages is now at 44.10. Below the 44.10 level, still a risk of a probe towards 42.32, which was the March support, even if we then head higher. For the currencies, the dollar sort of bounced back a little, especially as far as sterling is concerned. We've had that key reversal to the downside earlier this week. Still now toying with the 10-day moving average. That's the green line. Currently resides at 145.42, so we need an end-of-day close back above that to get the recent recovery back in gear and a possible retest of the 200-day moving average zone at 148.55. For euro dollar, it's all about the 115 mark, really sort of a round number. 114.90 at the moment. Top of the channel here towards 115.50, so we could still get up to there. Support in the first instance 113.90, but we're on the bull tack still, and the top of this channel could be back towards the 116 level. Sort of makes more sense really than just the 115, but end of day close above 115, probably a decent psychological trigger for euro dollar. Onto the cross of the moment, which remains dollar yen. Decent bounce off the floor of this falling trend channel from the beginning of the year towards 105.50, but we seem to be struggling a bit around the 107.50 zone, and it would be surprising if there wasn't at least one more dip, or maybe a test towards the 106 level, even if this market then recovered. That low at 107.84, probably the best initial target for the bulls at the moment. Finishing off with gold, which has obviously been rather disappointing after its brief flirtation with $1,300. It's all about 1284, which was the old high in March. If we can close back above that, then one would suggest that this market's back on its way for a $1,350 target. Stop loss at the moment back below the 10-day moving average at 1265. That's it from me. More updates at the same time tomorrow.